I'd like to begin by acknowledging the traditional owners of the land in which we meet today, the Whadjuk people of the Noongar Nation. I'd also like to pay my respects to elders past and present. My name is Graham Tiver and I'm the Chief Financial Officer and Executive Vice President for Woodside Energy. Appearing with me today is Tony Cudmore, Executive Vice President, Sustainability, Policy and External Affairs. We appear on behalf of Woodside Energy and not on behalf of any of our joint venture partners. In 2024, Woodside marked 70 years since its founding in Victoria, and we are named after the town of Woodside in Gippsland. Around 67% of our share register is held by Australian investors, and more than 550,000 are everyday mum and dad shareholders, with many more Australians having an indirect stake through their superannuation. We employ around 3,700 people in Australia and headquartered in Perth, Western Australia. Woodside supports its workforce and communities it works in, such as the Pilbara region of Western Australia, through apprenticeships and training initiatives, investing in local education and housing, and also create long-term employment opportunities and partner with First Nation businesses. The natural gas we produce contributes to Australia's energy security and sovereign capability. We supply domestic gas to WA alongside our export commitments. In Victoria, 100% of our gas produced from the Bass Strait assets is supplied to the domestic market. Each year, Woodside makes a very substantial contribution back to the Australian community through tax, royalties and other levies. When Woodside succeeds, Australian workers, communities and shareholders share in that success, and governments receive the revenue needed to fund essential services such as hospitals, schools and roads. Australia is fortunate to have a globally significant gas resource endowment. For decades, these resources have underpinned reliable and affordable energy for Australian households and industry, supported thousands of jobs, strengthened regional and international partnerships, and delivered substantial and growing tax revenues to governments. Australia requires stable, predictable, globally competitive settings to maintain investment, supply and energy security, particularly in an environment of intense global competition for capital, recent global disruption and sustained price volatility. Australia's existing tax framework achieves that balance. It recognises the very large upfront capital investments required to develop gas projects, typically measured in the tens of billions of dollars, and is designed to increase government revenues as projects mature and profitability increases. The framework has supported more than $400 billion in LNG investment since 2010, while ensuring state and federal governments benefit across the full life of those projects. The Petroleum Resource Rent Tax is a central part of that framework. The 2017 Callaghan Review reaffirmed the PRRT as the preferred mechanism for achieving a fair return without discouraging investment. Following recent amendments, an increasing number of projects are now paying PRRT, and those contributions are expected to grow as new developments mature. Woodside is a significant Australian taxpayer. Across our merged portfolio, we have paid more than $22 billion in PRRT since its introduction, including $471 million last year. In total, Woodside paid around $2 billion in Australian taxes, royalties and levies in 25 and approximately $13.8 billion over the last 4 years. Across company tax, PRRT, royalties, excise and other levies, Woodside returns around 44 cents of every dollar of profit earned in Australia to the government. It is our view that more supply through new gas projects is the most sustainable way to increase long-term taxation revenue from our sector. New projects deliver decades of taxes, jobs and economic activity. For example, Woodside's Scarborough Energy Project is projected to add $5.5 billion per annum to Australia's GDP, support over 3,000 direct and indirect jobs, and deliver Australian $55.5 billion in taxes over its life. By contrast, short-term tax increases and ad hoc changes risk deterring investment, reducing domestic supply over time, and ultimately diminishing rather than increasing long-term government revenue, while also weakening Australia's energy security.